Sandeep Bhatia is our market master of the day. He's head of equity and country head India at Macquarie Group. He's joining us right now to take some questions. Sandeep, great to have you with us here. Thank you very much, Prashant, this side. So, I mean, back at 18,000, Sandeep, I guess we got to begin there. But let me ask you, where do we go from here, in your opinion?
Yeah, we have a Diwali which has come a month early, maybe. So good to see that in the markets. But I think we will probably go into the third quarter of the financial year or the fourth quarter of this calendar year quite strong. This market has legs to it, essentially around the fact that the worst of the commodity spike that we saw in the first 6 months of the year is now behind us. And to some extent, the only disappointment has been a sort of weak monsoon. Broader industrial production consumption trends are still holding up. And to that extent, this market would probably see another 8 to 10% kind of rise in the next 3 to 4 months. But then that should peak out. I think coming in the first quarter of next year, I think with the budget around the corner, there would be profit taking.
Okay, there would be profit taking. IT is beginning to make another move now, by the way. And just keep an eye on Bharti Airtel. It's about to negate a major double top at 780. 780 is where it's topped out 2 times. I mean, if it were to take out it this time, then things could get really interesting. Sandeep, hi, good morning. What's the verdict on large cap IT names? Because in the markets now expecting maybe another buyback from Infosys. We've seen a bit of a rally back again in NASDAQ. That's also helping. But this remains the only pocket which is still technically in a bear market compared to the rest of the market.
We like the IT sector. We like HCL Tech. We like TCS. We like Infosys. So we definitely like that. Our call here is that we will continue to see, a decent earnings growth come through. 10 to 12% kind of earnings growth. A lot of negativity still around the sector. We are seeing a lot of pushback. But the US will not have as big and deep a recession as we have seen in the previous cycles. So to that extent, the IT sector will actually offers very good value at current levels.
Okay, the IT sector offers very good value. That's interesting. So you're not concerned, Sandeep, good morning. You're not concerned about, problems like not just the US recession, but the companies themselves are seeing margins at multi-quarter lows. I think the lowest in 10, 11, 12 quarters for the larger guys, right? Like an Infosys and HCL Tech. You're not worried about more operational pressure through the course of the recession?
Well, I think you just outlined all the pressures which are there in the price. So now the question is whether you keep chasing the stocks which have already doubled and more in the next 6 months, or you look at some value here. So that's why I phrased it with some value. So I think definitely there could be some negative news still in the US, but we don't see the kind of big layoffs or any of that kind of 2008 kind of cycles or previous cycles that we saw. I don't think that the economy, at least in the US, will take such a big hit. If you have to ask me, the real challenge will be in Europe, not as much in the US. And at least on the entire balance between valuations, earnings growth, IT sector actually stands out.
Okay, so the IT sector stands out. I wanted your thoughts on what's happening in one of the other consumption piece, which is autos, right? Companies like M&M are making big investments in the electric vehicle space. It's a big bet, considering that there are many challenges there. They're investing 9,000, 10,000 crores over the next couple of years. Is this a space that you want to bet on? Not just the traditional IC engine guys, but even the electric vehicle players. And how else would you look to capitalize on the growth in the auto space?
You have asked me this question a couple of times before. So yes, I think the auto and the entire electric vehicle space is definitely worth looking at. I would still go with the large players, which are essentially Maruti, Tata Motors, and Mahindra's. Mahindra has been a standout, I think, essentially because its product cycle has surprised both in terms of the consumer response and the fact that the slew of products that have been launched have clearly upped the game in terms of the product quality that M&M used to come out with. So that's definitely a dark horse in the entire auto sector space, and I would continue to bet on that. I would also expect that entire EV to be led by essentially Tata Motors and Mahindra's over the next couple of years.
Sandeep, defense as a space, I don't know if you have formal coverage, but
We don't, unfortunately, as such.
do you get clients asking you about the space, asking you to initiate coverage, wanting to know
Yes,
more? What's Yeah.
we see a lot of interest there, but it's a bit project and a bit subject to lots of issues in terms of ordering and delivery schedules and so on. Impossible to predict. Actually, it's too much project based and definitely government policy based.
it's very lumpy. Yeah, it's very lumpy.
Yes, it's
and-
very lumpy. It's impossible to predict. Structurally, we know we are going in the direction of Make in India, and at least on the defense front, some major platforms will definitely see Indian corporate sectors come in and start contributing to that. But if you want to look at it, given the entire cycle of defense purchases in India, these will take at least 5+ years, if not more. It's good to know. It's good to have an eye on. I don't think you can deploy big sums of money or build any kind of big earnings projections, which can be valid and credible, at least in the next 2 to 3 years.
Stocks have done very well, though, right? I mean, I think that generates a lot of interest as well. But there seems to be, again, I mean, it's such a large, huge sector, and it's very lumpy, very large platform, project-based. But there seems to be, the direction seems to be make here and buy here locally rather than import, right? So import substitution is the big theme. That seems to be the general direction. Now, as you say, can one really take meaningful exposure here? One is not very sure. You wouldn't want to do that at this stage, Sandeep, is what you're saying, right?
We don't want to do that. I would be happy if the capex cycle as a broader thing turns around for India. That we have waited for a decade, and maybe still it's started happening, but it will still take some time, a year plus, for it to pick up. Defense is even longer. Yeah, and it's the first time ever if that happens. Impossible. I think actually the market also doesn't have the information and the background for these things. It's just going on a thematic basis.
Okay. Well, just look at the market. It's really been such a roaring market. I mean, there's absolutely no sign of any profit taking. In fact, the Nifty is now building on further. 18,041 is what you have. The mid-cap market, of course, has been doing rather well. And just look at cement stocks once again. Shree Cement is up another 2.3%. Look at ACC and Ambuja. A lot of people thought maybe after that open offer is over, the stocks will fall. Even Ambuja went into ban. And look at how these stocks have rallied. Sandeep, this has been a stunning rally. Of course, ACC and Ambuja have the Adani factor, but the other stocks as well have rallied. Do you like anything at these levels in the cement space?
We like Ultratech as such. That's what we like. We like Dalmia Bharat. So these are some of the names that we like. That's where we are positioned.
I have a follow-up. Okay, but nothing in the broader cement space, in the broader market, in the mid cap and small cap, because that's where at least there's some valuation comfort. The large cap cement stocks are now way above their median valuations.
No, that's primarily where we are positioned in the larger cap stocks.
For the market itself now, I mean, as Anuj was pointing out, it is not stopping at all. Just look at some of these names, right? Even in the broader markets, of course, the limelight is taken by the large caps today. There's no two ways about that. But even in the broader markets, names like, something like a Zomato is now coming back, Lemon Tree Hotels, you have something like an IDBI Bank, Crompton Consumer, Specialty Chemicals is coming back in a big way. So keep an eye out on that pocket as well. Sandeep, we were talking about the corporate profit to GDP ratio, which has improved drastically for India. It's now at a decade high at about 4.3%. A lot of brokerages have gone ahead and raised their full year Nifty EPS targets as well for FY23 and FY24. Would you do the same? And if yes, what would the growth look like?
So we don't have a published Nifty target. Most analysts actually end up cutting it. I think growth for India would be in the region of 16% plus for the current year. The real challenge for pricing EPS growth will be next year. Most people assume that India's GDP growth would be much lower. my own view is that India is in a good earnings growth cycle for the next 2 years. We will definitely see high teens growth of 14 to 18% for the next couple of years. But the real challenge will be for next year, and that's something which we will have to monitor. At least in the current phase that we see, as I said, market will run its course till the end of this year, and the real challenge will be how top line and earnings shape up for the next financial year.
Sandeep, do you have coverage on hospital names? That's a theme we're going to discuss in a little bit from now. We've got a management of a hospital chain joining us, but anything you like there?
Hospital names are definitely interesting. My own personal view is that we will definitely see India come through much more strongly in the entire medical space, and Apollo Hospitals is one such play. Per se, I think it's still a space which is still nascent, and it would benefit from kind of longer stable earnings growth, which many of these companies have had episodes of earnings growth coming off. So we'll have to wait and see the credibility of earnings come through for the entire space.
Now, Sandeep, since you do talk to a lot of FIIs, what's led to this sentiment change, and what kind of money is our market attracting? This $6 billion plus that we've seen in last 1 month, is it India dedicated money? Is it ETF money chasing momentum? Any thoughts?
So I would characterize this money as giving up on India correction money. So a lot of people took money off the table thinking that India would correct in April, May, June. I think people have given up on that, and some of that money is coming back. I wouldn't think that there's a major money which is coming from other markets as such as China, because those markets are seeing significant negative flows, and the Indian market doesn't have the ability to take such kind of inflows if money is coming out of China and pours into India in a big way. But it's mostly India focused or EM weightage benchmark money for India, which was waiting at the sidelines and is now coming back. The real challenge for all foreign investors is to see whether India will continue to buck the trend. I think what's happened also is the fact that we probably came into a fantastic geopolitical strategic space, which the market has benefited from in the last couple of months. And we'll have to wait and see whether that kind of sweet spot which India finds itself in continues, and we see the widening of earnings growth, which this market has clearly lacked for a long time. And that's the real challenge for next year. So this year is mostly done, and we will be on this phase, especially because the worst of the commodity prices are over, and the challenge will be for the next 12 months.